Hi, Jason Mitchell here, and I want to discuss what's happening right now in the lending world with these rising interest rates and some of the things that we're going to see this year, because when things shift as quickly as they have, there is a lot of uncertainty. And while in the real estate space itself, what rising interest rates mean from a purchase perspective. In a rising interest rate environment, especially as quickly as it is, it means that the refi boom and also just refis in general are basically dead right now, with the exception of cash out. You're going to find lenders highly focusing on purchase right now because it's pretty much the only game in town. But what you're also going to find too is consolidation within the space. So the players out there and the ones that have good balance sheets and the ones that can acquire are going to look to acquire opportunity to get bigger and gain market share, but also doing it through the means of acquiring good servicing portfolios. Who can we acquire that has an established book of business that we can market to, so we can market to them for new purchase opportunities, listing opportunities? It's going to be shaky for a little while. And the analogy I used was, it's like right now somebody took a mat full of dust, put it on the floor, and all the particles are in the air right now. The dust will settle. And when the dust settles, what we're going to find is consistency, but we're also going to find less lending institutions out there that will be gobbled up by some larger institutions, and we're going to see a contraction in the marketplace. It happens. On the real estate side, what we're going to see over the next 60 days or so is you're going to see consumers be a little hesitant. The market is just up and down like crazy with fears of the inflation and everything else going on in terms of the stock market. But also when it comes to interest rates rising like they have, consumers get a little bit nervous. When the rates finally settle down and we get to an environment where people can at least take a breath and know what's going on, the purchase model will not stop. Purchases will continue, because with rents being where they are right now and as high as rents are and continuing to go up, it's always better to purchase. So there will be consumers purchasing homes, in my opinion, still at a significant level. And the market is not going to crash. We don't have enough inventory yet. I would argue that a rising interest rate environment is good because it will lead to more inventory. Well, how does it lead to more inventory, Jay? Well, it leads to more inventory because where rates are, a lot of investors will back off and a lot of second home buyers will back off because the financing is significantly more expensive than it was only 6 months ago. So you'll find your Airbnb buyers, you'll find your rental property buyers, you'll find your second home buyers are going to be on the sidelines for a bit, which means that it opens up opportunity for end users to get into a home. If you follow me on social media, one of the things I mentioned was that the days on the market will start to get longer, and consumers will say, well, this home's been sitting for 2-3 weeks, a month, which is nothing, but over the past 2 years, what we've seen it is. And the answer to that question is yes, thank God that rates went up. And they're like, well, wait, what does rates going up have to do with this home sitting? It feels odd that it's sitting. What's wrong with the home? Well, there's nothing wrong with the home. The market has slowed down a bit, and thank God it has, because it's now allowing you to become a homeowner. It's now allowing you to have home ownership. Because if rates had stayed where they were, not only would this home be up another 5 to 10%, you also would have had 20 offers that you had to compete against. And even though you may have to spend an extra $300-400 a month on your mortgage payment, at least you can have home ownership. And so it's the talented agents that are going to be able to spin this, and not even spin it, actually just say, hey, good for rates going up, because we are going to be able to put more people in the houses, which means that the purchase model for lending should enhance and improve. It's the refi things that are down, and that's why everything is shaking up right now, because if you don't have refi, for most lenders, you almost don't have a business. And if it's so heavy refi focused, it's really tough. So you are going to see layoffs and you're going to see people shifting, but purchase is the future for at least the next 12 months until we see where rates end up falling. And for now, what we need to do is we need to take a breath and realize this does happen. This isn't for those of us that have been in the business now, for me, almost 20 years, I've seen this happen multiple times. This is the place where we're figuring out where things fall, and we're taking a breath, but the dust will settle. And it'll happen. It won't take too long. But right now is the settlement time where we see the industry change, but knowing also that purchase is not going anywhere. Purchase will continue. Consumers will continue to buy homes, and there will be more of a selection of inventory for them to choose from. So me, being boots on the ground, being a real estate professional and servicing purchase, we're looking forward to this opportunity. We're looking forward to actually finally getting consumers and homes that would have never had the opportunity to do so. So for us, it's a good thing. And for lenders out there too, it will be a good thing. In the end, the strong will survive. So that is the market update right now with everything happening. We'll talk to you guys soon.